our brains aren't built to really appreciate the advantage of compounding. But as a concrete example, Bitcoin's what, around 100K now. So you bought, say you bought at $1,000 or $100. Say you were very early, 2014. You're looking at an appreciation of $99,000 plus, and marginal rate on taxes, if you're in a high tax jurisdiction like California, is going to hit like 35-40%. That's like $35,000 in, whereas if you sold in your Roth, zero taxes, and then you can reinvest tax free. Would you like $300,000 or $100,000, right?
Well, it's easy to overlook the right way to do taxes in crypto, but on today's episode, very excited to welcome in a founder and CEO who has dedicated his life currently to solving that issue and helping people save on taxes in the world of crypto. Very happy to have on with us the CEO and co-founder at Anchor Zero, Sunil Abraham. Sunil, thanks so much for coming on, man.
Thanks for having me, Zach. It's great to be here.
Yeah, and congrats on everything that you guys are doing at Anchor Zero. A big announcement in terms of what the project's all about. And I think for a lot of our viewers, to get 2025 set off in the right way, a lot of people are taking a second look at their taxes. And I'm excited to dig into this because Anchor Zero is doing something that a lot of America's wealthy have been doing for a long time, which is be very smart about taxes. And basically, to summarize it, which I'd love to turn to you, is just kind of using what has already been allowed under U.S. tax law with IRAs to also incorporate a way to use crypto to save on taxes as well. So why don't we just start with what Anchor Zero is all about and what you guys are offering?
Sure. Anchor Zero really helps Americans invest their retirement assets as freely as they want to. So if you want to put something weird into your IRA, we're here to help. IRAs are amazing tax advantage vehicles. Inside the IRA, their transactions don't get taxed. So if you have an asset that you think is going to, or an investment you think is going to appreciate significantly, putting it in the IRA to invest for your retirement makes a ton of sense. And what we launched or announced yesterday is the ability for individuals to get pre-launch tokens or digital assets into their IRA. So this is something no one else has done. The ability to get something before it's on an exchange. So if you're an investor and you have access to a great investment, the best time is to be as early as possible. I mean, imagine if you were one of the seed investors in Solana and you could come in and get that into your IRA, right? You're looking at maybe, orders of magnitude of appreciation. And if that were in a Roth IRA, all of that appreciation would be shielded from taxes. And then when you distribute at retirement, there's no income taxes either as well.
Yeah, no, it's very important. And again, as I said, I think it's one of those examples that we've seen other huge tech founders, including Peter Thiel, kind of be one of those ones that has been able to use a Roth IRA to kind of shield a lot of those tax implications. And, as people wisen up to these things in crypto, I think on your site you have a lot of examples of how much money can be saved in these things. And as you mentioned, in boom times, token launches are the perfect opportunity here. So, I mean, I guess, what have you learned in terms of the life cycle of Anchor Zero? When did you start this? What made you want to do it? How did you figure out that this was a huge thing for kind of the crypto space? And I guess we can get into some of the internal plumbing in a second, but what was the light bulb moment?
Sure. I used to be a quant trader, and I, during the pandemic, was having lunch with some friends that were very into crypto, and I was asking myself, okay, what's going on? And I just started in my personal account systematically trading digital assets like I would at my old job, and very profitable. And the biggest cost was taxes. And I asked, well, why can't I put this in a Roth IRA? Why can't I have my Roth IRA trade? And it was this light bulb moment of, well, actually, you can, once you start pulling the thread of how the tax code works. but there's no infrastructure. The financial infrastructure isn't there, and just saw this huge opportunity if we could make this available to Americans, just how impactful it would be. So to do that, we started a new financial institution. We started a chartered trust company in South Dakota, and that's really what enables all of this. Is that we're completely vertically integrated from banking institution to the web app that you see and click, and that's what allows us to make it work for for these investors who want to be able to invest their seed deals in digital assets natively.
Yeah, and I think, important to highlight a little bit of, I guess, that plumbing because, it's so tricky. I feel like the space moves so quick that you really have to be able to, I think, jump in and support a lot of these tokens, or sometimes the ones that haven't even launched yet. And so, how have you kind of wrapped around that? I know you guys have a partnership with Anchorage. How have you kind of enabled some of that to happen in a space that does move so quick?
Yeah, I mean, Anchorage is a great partner. They're the only federally chartered crypto bank, and they hold on to the underlying digital assets for us. And they're very responsive, very fast. They work with the biggest, best projects, and it's kind of a two-part partnership because we need to support it, Anchorage needs to support it, but I don't know, you move as quickly as the market does. So we do what we need to do to support new ventures as they come up, and you know we're in the business of supporting great companies and investors. So we make it happen.
I think the other thing to highlight here is that it's a very interesting tactic. IRAs, Roth IRAs, have been around for a really long time, and I think some people have wisened up to a lot of the smart moves that wealthier individuals can make to kind of, I guess, utilize both. Sometimes you can't contribute directly to a Roth IRA over a certain income threshold, but we've seen people kind of navigate backdoor IRAs. And I think one of the cool things, Sunil, just about in general, kind of the idea of the internet helping people learn and wisdom being spread far and wide is, if I'm thinking about Anchor Zero correctly, it's kind of like taking that and then also applying it to the world of Web3. Is how do we do this? Because even the IRS, even the government is trying to figure crypto out. And you guys seem to be kind of at the forefront of that in helping people navigate it all. So, what have you seen? I know it's early days in you kind of turning this product now over to the crypto world, but how do you see it kind of growing over time? Is it only founders who can utilize this? How do you see it applying to people?
Yeah, it's not just founders, teams, any investor, any angel investor. I mean, really, it's anyone that has opportunity to invest in a token before it goes live. Uh, we can help with liquid token investments as well. So we support tons of liquid tokens that are listed on exchanges. But the reason people come to us that because what you can't do anywhere else is to be able to invest when it's a private investment. And if you want to make that type of investment, we can help with that. And I would say most of the interest comes from uh, these type of angel investors, founders, early team members. From our side, that distinguish there's nothing to really distinguish between all of those. These are all people that want to get an early stage digital asset or token interest of some kind into the IRA. But yeah, we're definitely interested in expanding how how we can serve and who we can serve. And I think one thing that's interesting is you have these platforms now like Echo and Legion that are making it a lot easier for a longer tail of investor to get access
Hmm.
to investments. And so I think one trend with crypto especially is that it's not just institutional investors and really well connected investors. It's everyone. Like
Yeah.
the world marketplace is just there for you, and so we definitely want to support that as well. So I think that's something we'll be working toward.
But yeah, you mentioned Echo, and I think the idea of everyone having access to these deals is certainly democratizing kind of the upside for people. But I think if we were to apply that to Anchor Zero, it's really kind of creating the shield in the upside for everybody too, in a way that really couldn't be done before. Even with Bitcoin, by the way, it took a long time for kind of Bitcoin IRAs to take off, and then once it became available via the ETF, suddenly not so hard. But for everything else in crypto, still pretty difficult. I mean, how do you project kind of the savings that Anchor Zero might be able to generate, not just on an individual basis, but how big you see this market kind of shaping up to be?
I mean, U.S. retirement is massive, right? There's like $40 trillion of U.S. retirement assets. Total crypto market is 2 trillion. I think American wealth is like 140 trillion. So, you have like a third, over a third of American wealth sitting in their retirement. Especially when you cut out home equity, it starts to, creep into maybe the majority of wealth, especially when you get out of ultra high net worth. So, you look at that and you say, well, what can you do in crypto out of your retirement? On one side, you have Bitcoin ETF, which captures a lot of it now. It's easy to get exposure. But most activity in crypto is not Bitcoin, right? It's all these other things that are happening. And so I think I mean, crypto is just going to grow. I think the opportunity is huge. And it's our job as a service provider to improve and increase access. And I think this is really just step one is
Hmm.
angel investors, the type of people that are doing private deals. I mean, what we'd really like to do again is make it just as easy to invest in Web3 natively as you can
Yeah.
through your retirement, because that's where a lot of people's wealth is tied up.
Yeah, like I said, I mean, if you're a long-term holder and you just kind of want to ride that wave, I've been increasingly telling people to just buy the Bitcoin ETF and slap it in an IRA. And I know that that's not necessarily the most, Web3 hardcore, everything's got to be on chain advice out there. But from a tax perspective, it does make a lot of sense. But that doesn't really exist for anything beyond it. And I think one other piece to highlight in terms of what Anchor Zero is enabling, if I understand it correctly, is also to allow some of the staking rewards to also kind of funnel and flow into that tax shield as well. I mean, as proof of stake blockchains have continued to take off here, I mean, that seems to be a pretty important piece that people should be aware of.
Yeah, that's right. So we can allow staking and governance through these IRAs, and those are things that you're not going to get through an ETF basically by design. And staking rewards can be substantial. You're talking about, for some assets, they can hit 10% APR on a reward basis. Uh, and yeah, the ability to get access to that through your retirement is massive. And I think not being able to get access to that effectively makes you poorer or makes your retirement poorer.
Hmm. I mean, in terms of, I guess, we mentioned the backdoor IRA moves. We mentioned kind of, the IRS wrapping their head around crypto. We've mentioned kind of all of that as it exists. But it seems like we're kind of entering this new period of change when it comes to the regulatory pressures on crypto. And I wonder if you, Sunil, in your seat, have also kind of, in founding this, have looked at maybe how some of those opportunities might accelerate even more rapidly under President Trump, and maybe some of the changes coming down the pike. What writ large are kind of like the big things that maybe people are sleeping on, aside from the ability to use IRAs, in the crypto tax space as you see it?
Uh, it's a good question. I mean, I think for I mean, we're so focused on retirement. So I think there are some unanswered questions in retirement with respect to uh, digital assets. And I think maybe the biggest one is actually going back to staking. It's actually, so this is a little technical, but it's not completely the case that IRAs are completely tax free. They're tax exempt vehicles, but they can incur taxes. There's
Hmm.
certain types of income that can incur taxes. And one thing that's unclear today, and this is something that doesn't just affect IRAs, it affects the Yale endowment, the Harvard endowment, like big endowments will be affected by this if they want to get into digital assets because they're tax exempt entities. The big thing that's unanswered right now is what is the tax treatment of staking? So staking affects, as you've said, almost every new digital asset. Uh, how should they get taxed if you're an IRA or a nonprofit? Unclear,
Hmm.
totally unanswered. No, the IRS hasn't opined. There hasn't been any legislation on this, and that uncertainty is it's fine for really wealthy individuals, for people that can take on a bunch of risk, but for the long tail of investors, that's not going to be acceptable. And what that's going to mean is that until there's clarity, service providers aren't going to offer staking for these tax exempt accounts. So, for example, I don't know if you're going to see an ETF with staking on ETH
Hmm.
until there's this type of this clarity. So, I think that's something that we think is really important. We love to see clarity on, and I think you may get clarity on that in the next 4 years.
Yeah, one of the other interesting things, me coming from the traditional media world and some of the narratives from traditional media that have been so wrong about crypto for a long time is that, that it's only used by criminals and people who don't want to pay taxes. And maybe, Sunil, to give you the floor to maybe correct that narrative, when you have people saying that that's all crypto is, obviously you wouldn't create a company that's dedicated to kind of helping people with crypto taxes if you thought that. But how do you push back on those ideas, and maybe what's some of the misconceptions when it comes to crypto that you guys at Anchor Zero are rectifying?
Well, I mean, I think we're part of this broader trend of financial institutions who, like traditional financial institutions. So we're a new financial institution, but to your point, we're holding on to one of the most traditional assets, which is retirement assets, these tax advantage retirement assets. And the reason we're doing that is because there's enormous demand, and many individuals believe these are assets that are valuable, that will appreciate, and they want to invest in them. And so I think, it's one thing for people to say there's digital assets are just used for nefarious activity. But when you look at just the actual demand from normal Americans, whether those are retail or high net worth or really well connected investors, they want to invest. I mean, they're not trying to facilitate uh, activity that would benefit the North Koreans. They want their own wealth to increase. And so, from my perspective, we're a neutral service provider. We want to
Hmm.
enable people to do what they want to do. We don't take any type of parental view on investment activity. But there's real economic activity happening in crypto, and investors want to be a part of it.
No, for sure. And I think, on an individual basis, some of these savings stack up really quickly if you are kind of, to hit it big with some of these early stage tokens, and you would want to shield some of that. But even in the context, I suppose, Sunil, of just someone who's throwing money into, their retirement accounts for Bitcoin, over time that adds up. Even if it's something small today, not only just kind of like the historical returns from what we've seen from Bitcoin over the last, I don't know, call it 10 years if you want to use that, those are gains that are huge. I'm even thinking about myself and kind of getting into Bitcoin in 2014. That would have been nice to have shielded there. So, I mean, put it into, I guess, the example, a simple example of, look, here's how much you could save over the time period. I mean, it's very difficult to explain to people because retirement seems so far in the future, especially for younger people. But it stacks up. It's rather huge.
Yeah, I mean, our brains aren't built to really appreciate the advantage of compounding. But as a concrete example, Bitcoin's what, around 100K now. So you bought at $1,000 or $100. Say you were very early, 2014, maybe it was around $100 then. I think uh, so. What are you looking at? You're looking at an appreciation of $99,000 plus, and marginal rate on taxes, if you're in a high tax jurisdiction like California, is going to hit like 35-40%. So that's like $35,000 in, and if you, whereas if you sold in your Roth, zero taxes, and then you can reinvest tax free. And if you start doing the math on just how much you lose to tax drag over time, if you're an active investor, it can be really significant. You're looking at, by the time of retirement, a 200 to 300% difference in actual return. So like, you could be doubling, tripling your investment if you were a great investor. Um, like, would you like $300,000 or $100,000, right? If like, that's, I think, is as concrete as that.
Yeah.
And 300 is better than 100. And I think, the reason why retirement accounts are tax advantaged is to encourage people to save for retirement. So that way they have a larger asset base to which they can, tap into when they're not working anymore. So
Yeah.
it is really important, and the numbers can be staggering.
No, I think it's an important piece because a lot of people don't in the hodl community they just don't want to sell. I don't know how much of that is just because they're believers long term, but also I think it's a big piece is they don't want to have tax implications, and so they're just kind of there riding the ups and downs. And that obviously we've seen Bitcoin, very volatile asset, the volatility's going down, but sometimes it's because they don't have the tools that maybe other people do. So it's really cool to see you guys growing this and bringing it to not just crypto people, but really democratizing the idea of kind of using IRAs the way that the Peter Thiels of the world and a lot of other people have done for so long. Appreciate you coming on here, man, and congrats on the launch and congrats on growing this. Sunil Abraham, the CEO and co-founder at Anchor Zero. Thanks, man.
It was great to be here. Thanks for having me, Zach.